Apple is at a critical juncture, and I want to show you exactly what I'm seeing on the charts. So if you're new here, my name is Hima Reddy. I use price, time, and momentum trading to help boost my trading and that of my tribes. And I have plotted here Japanese candlesticks, each candle representing 1 day of price action for Apple stock. The RSI Power Zones, my favorite momentum indicator, down below, and a couple of annotations on the chart using technical analysis with my special twists. Now, this vertical line here, along with this cross, this intersection at 177.11 for April 4th, that was yesterday, Tuesday, April 4th, shows a forecast. So the intersection of those two lines was a forecast for Apple to trade up into. Now, the beauty of this forecast is that it could have been calculated as early as March 3rd. So there's an entire month to be trading up and to the right on Apple if you know how to deploy my forecasting techniques, which I teach in loss forecasting. Coming back to the simple price action analysis on this chart, there's also a trend line. So a trend line is a directional indicator on a chart. It helps you be aware of the current trend and know if it's going to persist or change. So since the beginning of 2022, the market has been lower. Most stocks have been steadily lower. And January 4th, 2022 to the March 30th, 2022 highs produced this trend line, which was tested and confirmed in August of 2022, and for the first time since last summer has been revisited in the past few days. Now, all of this came together on my charts when I went to do my weekly stock picks for my Skinning the Market students. And yesterday, Tuesday, April 4th, I put Apple in the persistent uptrend category. What this means is that this is the category where you want to stop buying this stock if you haven't already, and you want to look at protecting long positions. And that was the exact right advice to give. So now what's ahead for Apple? Well, let's take a closer look, zooming into the more recent price action, as well as the RSI Power Zones and any other data here on this chart. So what I have is a pullback that we see is in motion, right? It was the right move to stop buying, not come in on today's action, and instead use the current action to protect profits on any long positions. But how far down might Apple trade? Well, the first stop is probably going to be 157.38. And the techniques I use to come up with that level, I teach in my Gann trading pattern system. So this is something I'm going to be diving into more deeply over the coming week. Keep an eye out on your email for notifications about live trainings I'll be doing. But I love trading chart patterns, and I love using them, especially in these volatile times. If you know the patterns well, if you know what you're looking for, they work even in these wild markets. Now, on top of that, there are a couple other levels that I'll demonstrate here. One is here at 155.98. Another is here at 158.49. Now you can see, interestingly, that they're sort of sandwiching the 157.38 level. So all of this is creating a zone of support that I would want to monitor very closely to see if Apple is just pulling back, just having a breather, folks who have been long are taking profits, or if there's a more significant trend change in motion. Now, looking at the RSI Power Zones down below, those of you who study this, many in my tribe do, might look at this and say, oh, we've got a bull-bear RSI face-off in motion, right? When you look at the recent action compared back to the February 3rd high. Well, yes and no. The bull-bear RSI face-off is most importantly tied to the location of the pattern among the RSI Power Zones. And the fact that we're seeing this pattern here in this white space between the red zone and the green zone, the area called no man's land, means to me that the impact of this short-term weakness pattern is probably not going to have a lot of duration, okay? It's probably not going to, on its own, send Apple significantly lower. When you combine it with returning to the trend line that I pointed out, right, the one from the January and March highs, that adds a little bit more weight to it, but still, all of this current pullback in Apple, to me, is short-term still, unless and until we return to this zone of support, and especially if we break below that 157.38 and 155.98 range of support. So, if you have been long Apple, now might be a great time to protect your profits, put some protective orders in there, or go ahead and exit your long position. And if you're looking to short Apple, I wouldn't do that quite just yet. Now, if you do it now, it might provide some downside to you that would produce profit. The thing is, you can see we're at 161.91 as of me capturing this analysis here, and 158 to 155 isn't that far away. So this brings in a concept of risk to reward, guys, all right? You always want to look at where you'd have to protect your trade versus where the market's going to determine if it's worth taking action in the moment. So at the current price action, at the minimum, I would want to put a protective stop above 166.84 if I were to go short. So call it 167. We're at 161, so that's 6 points of risk. But again, supports are as close as 3 points away. So the risk to reward, right? 6 risk for winning 3 is not so favorable. You would not play those odds if you were out playing a game, and it's the same thing for the markets. You are looking for a minimum, in my book, of 1.5 to 1 reward to risk. Meaning, if you're going to risk 6 points, I want to be making at least 9 potentially, okay? More optimal is 1 to 2. If you're going to risk 6 points, you have an ability to make 12. And while that could unfold in Apple, right, this could be the beginning of a little bit more substantial downside, it's not confirmed just yet. And I'm saying this as well because if you go back to the recent skinny dip video I did, I talked about how we are in an area of forecasts, 2 of them, on the broader S&P market. And the second one isn't until April 19th or so. So I don't know yet if the weakness in Apple, which is the biggest component of the S&P, which is why I mention it, I don't know if this weakness yet is a sign that we are continuing substantially lower, or if it's just a brief pause. We rally further into mid to late April, and then perhaps a more significant decline unfolds. So we shall see. I'm going to follow the charts, again, price, time, and momentum in their various forms. This 157.38 is based off pattern analysis, something I'm really focusing on for April. So again, keep an eye out for emails for invitations to a live event I'll be doing on that topic, and I'll catch you on the inside.